Stocks are about to make history. We're getting close to the big level, 5,000. But what happens at these 1,000 increments? And what is the stat that we haven't seen since 1929 that has some professional traders a little bit worried? More importantly, what's going on with earnings? Snap plummets 30% on a revenue miss. End phases good enough, is near enough for the stock. And of course, dark pool activity continues to shine all the way throughout this level. Today we'll be talking about that along with Goldman Sachs' big call on markets for the next month. And of course, there's one last thing we need to discuss, a massive ramp in Chinese stocks that just happened. Let's get into stocks, commodities, and cryptos together right now. Well, welcome back everybody to the Daily Show where we talk about markets around the world. We've been running this show for over 3+ years. My name's Tom, and if you love markets like we do, then remember to subscribe and smash that like button. There's a lot to go through today, including what happened to semiconductors as the market fails to make a new high on these and inventories remain elevated. We've got some great data coming up on that a little bit later on. But let's take a look at what Jason's posted here when it comes to the S&P 500. We're within a 3-year high. We're obviously within the big 5,000 level we'll look at later on, but fewer than 40% of the stocks are above the 10-day average, fewer than 60% of the stocks are above their 50-day average, and fewer than 70% above their 200-day. So since 1928, this has only happened once before, and that's been August the 8th, 1929. Now, if you're a bit of a history buff in markets, you'd know that a lot of people talk about 1929 and, of course, what happened subsequently into the 1930s, a effectively great recession in stocks that took a long time to recover. And a lot of people are going on about breadth right now. And although I think it's very different because we really do have main earnings, we can kind of draw some similarities. And I think the interesting thing here is the difference between sigma score of the index and, of course, the average sigma score throughout stocks. It really is about the Mag 7 or really the Mag 6 right now that's driving this market. So do we need to be concerned? Well, I think not really until we see any signs of real cracks showing. And what those cracks are going to be is price action based. Of course, price action is going to give you your trigger. Everything else is just interesting information that could be building an edge. Let's take a look at some of those bits of information, including futures positioning, which is sitting at 100%. And in this report, you can see it's incredibly elevated. But what does Goldman Sachs have to say right now? Well, as you might know, CTA positioning can be incredibly important. If we see a turn in this, it often marks a topping of markets and potentially a declining period for even upwards of a month or two. So when do we get this? Well, we said that we'd report on it, so make sure to subscribe. We'll post a lot of this over on our X account down below as well, so you can check that one out. And you can see here that CTA positioning is still incredibly elevated. In fact, it's spiked again. So that initial down kind of ride here that we saw hasn't eventuated into further selling. Now, remember when we were even more stacked back in July, we saw this turn and it led on to a very nice sell in markets, which gave that opportunity in October for you to get in at below mean reversion and some very nice levels. So let's talk about Goldman Sachs' opinion on this now. They've done a 1-month projection in terms of CTAs, and you might notice in these projections, they're either a slow, methodical grind up or in general, downward side. So of course, we've got some big downward flow projections here, and overall, I would say Goldman Sachs are negative on the next month from a CTA perspective, and that could show us some hints on what's going to happen with the market, along with some seasonality events such as February being the third worst month of the year. So let's talk about trend bias. As you can see here, it doesn't matter which indicator you're looking at, whether it be RSI, whether it be MACD, whether it be anything else, we are seeing a huge amount of divergence starting to appear. And at the same time, we're also seeing overbought statistics. Now, that by itself is not going to be enough. But as we mentioned, February is the third worst month of the year. It has a traditional sell that tends to happen around the 15th onwards, and that's due to the OPEX and also the bulk of earnings being out of the way. This week marks a huge week of earnings, not so much in market capitalization, but just lots and lots of companies. And of course, after next week, we're pretty much through the biggest ones except for NVIDIA. Let's talk about S&P 500 and some stats that we've seen recently. A 1% daily gain last Friday with more declining than advancing stocks. There were 2 down for every 1 that's up. That's rare. And for more declining than advancing stocks, we do tend to have some highlighted areas, which are either usually capitulation when the markets have sold off super aggressively, or a topping period of super overpriced stocks. Now, by itself, it's not that much, but you can see here the stats for the next month aren't that great. The same thing happens with FOMC decisions where we've seen negativity. You can see it kind of goes into a bit more coin flip. And the same thing happens when we have a massive run such as we did with like 14 weeks up. We close to a new all-time high. We've done 20%. We tend to go into a consolidatory period or a sell-off kind of period. And that's just the stats that tend to lie around the levels. What about the VIX though? Well, do remember the VIX is worth setting some alerts on. We've got this kind of 1450 strike level that could really get things started to 16, 17, etc. It might be worthwhile having an alert on your charts. And we brought this up in our previous video. What about earnings growth? Well, it does look like the market's seeing some earnings growth, which is obviously why we're seeing a surprise to the upside, mostly from technology. And you can see here, according to FactSet, we've got some interesting earnings growth kind of blends here. I think the rate for Q4 is around 1.6% earnings growth year on year. Now, the semiconductor index market is the most important to the US. And we've had this before where we got huge amounts of inventory. Now, inventory is getting eaten up, which is kind of good. But at the same time, what we have kind of seen here is still a very high level. Now, JP Morgan had a few things to say about this. They said inventory levels remain extreme, and we could see some destocking over the coming quarters, putting pressure on the demand itself. This is likely to translate to weaker pricing and margins for that sector. Now, if that's true and JP Morgan are right, then the best sector in the market over pretty much the last decade could be in some trouble. And if that's going to happen, then of course, we might start to see some weakness across the board. Semiconductor price action, I believe, is one of the most important things to be watching over the next couple of weeks. And in particular, we already did see kind of that island reversal to the downside, which it tested the high over the last 24 hours and sold off. Flows into cyclical or defensive markets. You can see here defensives technically have been going down across the flow side. Price action shows a little bit different. And of course, technology has been where everyone wants to be, which is rightfully so in the AI kind of run here. Just a quick reminder, we posted this and it's still very valid, which is a 6-month run. Then when you have tech earnings and earnings in general plus the FOMC, you can often see a topping of the market. And we find ourselves chopping around this just under 5,000 level for the first time. And obviously it's 6 months later. We also know that sentiment is super high. So of course, this means that the bulls are very much in control of this market from a retail side, and bears are getting pretty much taken out. And it'd be interesting to see this read coming through at the end of the week. So we will have that on this channel. And of course, watch for that probably around the Friday video, the Thursday close. Let's have a look here at what's going on with bullish percent index. Now, I've already mentioned that this is an early warning sign for me, and it's already started to go down. This was taken from about 5 days ago, but it has continued its way down since then. And you can see that it's really kind of marked the last high for most of the markets. So it's a very interesting read happening at the right time. This is what tends to happen in February, but I'm more interested in what happens in election years. And we do have those stats here. And you can see with sitting president running, we tend to kind of find weakness either this week or the next week. And we sell off, generally speaking, till March, with nice rallies through April. Now, we do want that rally in April. That's going to dictate a lot of the end of the year. So we're going to be looking for that. And of course, it'll be a very important point. Some other things that'll be important, of course, will be Wayne's contact details here in terms of what he's done. And he's done some good stuff. And what I mean by that is he's done his toy 2 month, which tends to be a November to January run. Now, when you get reads like this, he's got 35 and 2 track record with pretty minimal, I would say, bearish years of the two. Now, that's a great stat. So if you're an investor, you're a longer term holder, you're still going to be liking this market even with pullbacks coming. Speaking of a market that no one likes, but maybe they should start thinking about liking it, is of course the Chinese market, the Shanghai Composite. And you can see here some crazy stats around the fact that we just capitulated. And more importantly, we've already been reporting on the stats around this. In particular, we tend to see that when we got that kind of huge sell-off that we did last week, it's a capitulation that leads into a very good stat moving forward. Now, we don't have too much data from it, so of course you could argue, well, it's not enough to go off, but these are still all generally in huge selling markets, and they tend to mark around the bottom. And we already knew that from the Hang Seng, which hasn't made a new low, but obviously it was kind of showing that's possible. And it has shown really good signs of recovery as well. So I think there's some nice action going on and some excitement. Remember, there are many markets in the world. It's not just the US market. There are other opportunities, but you do need to be very good on your timing, especially when it comes to some of the emerging markets and even some of the international markets. Do remember as well, currency risk is a real thing, so you'll need to be careful with the ETFs that you are picking. Let's now move over to what's going on in the options world. 5,000 remains an incredibly big level. 49.58 remains kind of like the current spot price and kind of an equilibrium of zero DTEs. 4,900 is a big zone to get through. If we do break below that zone, I think we could be in for some business. And 48.45, the most annoying zone it is for swing traders. So we'll look at that on the charts very, very soon. Another thing that's interesting is the crude oil CTAs, which actually made a new low. They had a huge sell last week. Now, crude oil is starting to show a little sign over the last 24 hours of some recovery, but we'll go through that chart, and that is heavily sold now by CTAs. Most active big trades coming forward. We do have some big ones. I think Baba will be a big one for China and to see whether it can start to recover. We've also got PayPal and Disney coming Wednesday after the close. Some big stuff. And remember, these are the expected moves. So if you're trading Roblox, get ready for a wild day because it could be between plus minus 14% or something I think I saw in the options market. Let's now go through dark pool transaction activity. Huge amounts of transactions at this level. Are they buys? Are they sells? I tend to think they're sells because of the amount that we're seeing around this zone. And you can also see that it keeps coming up to it and testing it and selling that level. So it's a very important level. We've also seen SQQQ getting some trades on it as well. And while this is only early warning signs, it is still a warning sign. Over in the options world of unusual activity, these are the unusual activities. It was another pretty big day on average, 60% calls, so starting to get up there. And retail made up 29% of the single legs. So we are having a big impact in the markets in terms of the amount of options we're trading. But I would say a lot of people are on the wrong side, particularly in NVIDIA, which it looks like a lot of people are trying to heavily short, and they've been shorting it over the last $100, and I think it's squeezing them from that reasoning. Let's now move over to rotations, and you can see here there's a lot of rotations going on. We've got clean energy, solar, moving up. Finally, they're finding a little bit of buy, and that was thanks to some anticipation for end phase and others. But you can see here that defensives over the last 5 days are still up there. Healthcare, staples, semis still holding 2.2, and regional banks a horror show down 11%. So a tale of multiple markets for sure. Let's have a look at the S&P in terms of central bank liquidity, which remains kind of stable. We will update you if anything changes there. The US 10, 2-year, etc. have not broken above our level. If this does happen, you're probably seeing a bit of a flash sell, I would say, on the markets. This opens up the possibility of some pretty big moves there. Therefore, you would also be looking at things like the American consumer, XLY, XLP, a nice red closure underneath here. I say nice, it's not going to be that nice. But if that does happen, certainly a warning sign in markets at this stage, still bullish on XLY, XLP on the bigger timeframes. We've got home builders, one of our kind of canaries in the markets. Is this a distribution or an accumulation? We don't know yet, but we've updated you every day on that one because we want to look at it. Our bonds indicator, no real movement there, so we'll be watching that as much as closely as possible. And then we move over to the big hedge here, which is the US dollar. Now, the US dollar broke through 104, and of course, 103.80, 104 was my longer term average kind of area I thought that I want to see, and I did. So that was really great. We all got that in terms of we parroted it for like a month. It took ages. Then we got up to this level, and you'll see it's still kind of acting off the supply here. So we're not quite through. 104.50 breakout will expose, I believe, 105.50, so another one. And that, again, should come with yield. So I think that would be a pretty big movement for it. Copper still looks pretty bad on the charts, so no real changes there. You may want to look at small timeframes to see if you get any turnaround, but I think copper's a little bit tough to trade. Then we move to gold. It is really boring right now in gold. Gold is struggling. I still favor kind of GDX stocks just because I think that they're quite well priced. And you can see here over history, 23, a lot of nice buying positioning here. I think it's more of a position than necessarily a trade, but we will set some alerts here at these zones. And it was a bit of a shame to see gold break down here after getting that nice daily close above the 20 moving average. US oil. Now, here's where things get interesting. Of course, CTAs have been selling huge, but that is past history. And you can see here that we actually had a switch. Now, this was a fairly big deal. I reported it into our Market Masters Club. Links in the description if you're ever interested in joining that. And I'm kind of bullish here, at least to the 74, 74.20 a barrel. Now, at that point, you're going to hit supply on the left-hand side. And if we breach that, then, of course, I think 76 is the next zone. There's some nice little action here on the small time frames, but it may be short-lived. It's more of a scalp day trade kind of concept. Tesla, nice bounce, 2.23%, not bad. And of course, that comes off the day of seeing some buying, but we will really need to see a weekly close. Of course, Tesla, could it get down to 165 again? A nice positional level. And of course, if we get above this high here, I think it's looking really, really nice, especially after making that next low. So that's something that I think is kind of exciting on the charts. Semiconductors fails at the top again. 196 is a technical take profit based on the flag trade that we used to have. And this area here, I'm very unsure on for semis. We saw the island reversal down. We then kind of got a reversal on that. Is this some type of double top? I don't know. But semis certainly starting to struggle. And the big one there is going to be watching, of course, what's going on with things like NVIDIA. I just wanted to bring up Snap. Now, Snap obviously got destroyed, and it's down here post-market action. You can see trading at about 11.80-ish. Now, that's actually, funnily enough, back into the 61.8. Now, for people that are brave and actually want to trade Snap, and I'm not sure if you do ever want to do that, this is a very interesting level. Obviously, it's an absolute capitulation of the stock. Now, that can go further, and you've got to be very careful. In fact, if it was not a tech stock, when you fall 30%, the odds of the stock ever coming back to a new all-time high are not in your favor. And you might want to remember that if it's not tech. But it is tech, and it's coming back into position. It's actually gone all the way back to 61.8. The reason I'm bringing it up is because you'll notice that after earnings, you often approach very key zones. So we saw that in quite a lot of stocks. And if you look at something like a Spotify and you have a look at what happened, then you'll notice that we approached this big supply over on the left-hand side and then actually sold off. So people took some profit there. And that's very common when it comes to earnings season. Let's now move over to the Hang Seng Index. I really like this chart. I think it looks pretty sweet on the charts. And although it's just early, it's a pretty interesting one. And of course, I don't mind it. The Aussie market. Now, this is an interesting play because, of course, it broke through on the weekly. And this kind of signals that you're going to 7,800, maybe even 8,000 for the Aussie market. Now, if you're looking at a kind of weakness in the S&P, what that's suggesting, because you're seeing this in the FTSE as well and other markets, is that we might be going rotation here. Maybe big tech is totally overbought and we're going to see rotation, similar to some other pullbacks that we've seen recently where we have more of a kind of like pickup in like smaller stocks and stocks that haven't been going around. And then we have weakness in, of course, the big tech. Now, Aussie market does look okay. US 2K, you can see, did find some recovery here off that level. I'm a bit confused by this market. The dojis everywhere, the wicks, certainly a problem. We've got selling in this yellow line, we've got buying in this red box, and up until that point, a breach either, we won't really know. IWM versus SPY, you can see it's actually quite low in terms of positioning. So again, somebody that likes to live dangerously, they might prefer the Russell right now over the SPY based on historical averages and where we're at in terms of the oversold. And another thing here is the RSP, which we bring into our previous video. And it's because the S&P 500 equal weight market, you can see here it's kind of like floating all over the place. If we breach up, then that could be showing you that we're moving into rotation. And at the same time, if we breach down, then that's really bad because this has actually been very weak now ever since we got that huge rally last year, which happened into the late end of December. And that was big for Russell. And of course, we were following along with that one the whole time. What about Qs? Well, Qs here could be a double top, could be anything. A lot of people are saying, well, look, island reversal down. That's exactly what I mentioned. Then we get island reversal up. So we have to say question mark on this one. Double tops obviously in play. You know it's 20 moving average. It would close. That would signal, of course, swing traders to be getting in and movement down. Now, if we go over to the S&P 500, you can see here that we're constantly trading around that 49.60, 49.50 zone. This has seen some dark pool activity. We've got every single type of indicator under the sun showing us divergence on most timeframes. And then you have the key levels we need to be watching. So from an options perspective, we're currently looking at 4900, 4910 as a big options put level to be breached. If that does happen, I think we're in kind of that first day trader scalper kind of sell-off. We've also got 5,000 as a big level. We could make it to like 5,020. Daily closes will be something we look at a lot around the 5,000 level if we do reach it. Of course, trend is currently up. So they say the trend's your friend. You wouldn't really be negative necessarily on the market unless you were trying to predict. We usually say don't do that. And if you do, you'd have to use options because you need to protect yourself. But overall, the swing as well is a big point here. So 48, kind of 45, 48.50. We already know that's a big options level as well. And that could bring us into what we call mean reversion. So there's a lot going on in markets. We'll update you every single day that the markets are open so you can see what's happening. But at this stage, it seems to be a pretty resilient buy. Closure of the week will be an important level. Watch 5,000, very important zone. Bitcoin, it's still boring coin at this point. We still see sellers coming in around that 43.2 zone. That's the supply. We get it through. Anything else, then it's going to be a big zone for us to play with later on. So, of course, we get through 44, 43.8. Then we should be moving to 46, 47. At this point, small timeframes are pointing to selling here. Big timeframes are still pointing towards bullish until we get through that zone. So really, it's just that simple. There's two different thought processes. And if you're a buyer and you manage to get into the dip, then you're not really necessarily concerned just yet. Big news moving forward, nothing much. So just remember, it's not really the news here. It's going to be earnings and it's going to be price action based and options based. And that's kind of exciting because finally the markets are getting a chance to make their decisions on where it's best to trap money. Continue to watch. If you enjoyed today's video, make sure to subscribe, guys. Thank you so much for watching, and we'll see you in the next one. Bye for now.